Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the Equity Index Options Outlook for November 9th, 2008. This is your host, Patrick Ceresna. As always, we're going to start off with the S&P 500, and we're going to use the ETF Spider SPY to look at the charts on that. We were talking about the 99 to 101 focal point that the market really needs to get above that area in order to start a more robust rally on the upside. What we started at this stage now was a natural retracement, which is now coming right into our retracement support at the 90-92 area. This is a pivotal point in the market because the rally, if we are looking at for a year-end rally, the rally should start off of these levels. And so at this stage, if this support level did hold, we should at first see a retesting back up into that 99 to 101 area on the upside, and subsequently a completed measured move could target all the way up to the 103.5 to 107 area up on the upside. Any year-end rally could potentially go even as high as this 108 to 110 area, but we'll first see where the market goes here on the short term before we look at that in more detail. On the other side of the coin, if we do in fact have a breakdown below this 90-92 area, then at minimum we have the window opens for some solid retesting of the previous lows, which we call our 84-85 focal point. Then a measured move even on downside could have testing all the way down to 78.80. I mean, that most of the selling should be contained within that area. At this stage, we're not anticipating a new bear move on the downside just yet. But if in fact we did get that, that could target a move all the way down to the 68.70 zone on the downside. Next here we have the ISE U.S. Regional Banks Index, symbol JLO, and at this stage we were identifying the upper focal point around the 31-32 area, and last week we briefly broke above it on the upside, but it was more or less contained in that zone. At this stage we were going through what's a natural retracement on the downside, which we boxed into this 128-129 area. At this stage, if we in fact did find support holding in here, it opens the window to right back up to the 31-32 area, and then eventually a break of that area would have us measuring a move all the way up to the 34-35-50 area on the upside. If this support level doesn't hold at this 128-129 area, then we would be then at that stage looking for a retest of down all the way down to 24.25 on the downside. Next here we have the ISE Sindex, which is a symbol SIN, which is an index of the casinos, distillers, and tobacco companies. And we've been talking about that 75 to 77 focal point on the upside. The market rejected there last week and began a retracement. And we were looking for a broader retracement down toward the 66 to 68 area on the downside. We haven't 100% hit it on the downside, but more or less it's coming in there. So this is a level that if it holds, just like we've seen on our other indexes, it opens the window for a rally higher. At minimum, if this area holds, we'd be looking for retesting back in the 75-77 area on the upside, but a break of that area measures a move all the way up into the 80-84 box on the upside. On the opposite side, if for whatever reason 66 wasn't able to contain the sell-off, immediately it opens the window for retesting back down into that 59-60 area on the downside. As our other charts, with the ISE Home Builders Index, symbol RUF, we had a rejection up at the higher focal point around the 875 to 9.25 area on the upside, and subsequently began a retracement on the downside. It's now come right into the retracement box, which we identify as the 7.5 to 8 area on the downside. This is a pivotal area as well in this market, as if we in fact find the support levels in here, it immediately opens the window for retesting back into 875, 9.25 on the upside. But any break above that area also from this retracement point opens that window for a measured move all the way up to the 10, 10.5 area on the upside. So there certainly is a bullish implications to support holding in here. But any break of that 7.5 area on the downside with any conviction, at minimum, opens the window for retesting all the way back down to that 6.5 to 7 area on the downside. So we just need to see whether the support level holds here. Next here we have the ISE Natural Gas Index, symbol FUM, and we had a reversal on the downside off those highs around that 93 to 96 area in that focal area. Now we're retracing into the natural retracement box on the downside. At this stage, again, like the other indexes, this is an area that would need to hold to open the window for an upside rally. If this support level holds, at minimum we have another retest coming into the 93 to 96 area on the upside. But a break above that immediately opens that window to the 105, 110 area for a completed move to the upside. If that scenario doesn't play out and we have a break below 80, at that stage a minimum retest of the 70, 74 opens up. And then subsequently, a break of that level to the downside immediately opens the window for a new strong move to the downside, all the way down to the 50, 52 area potentially. Next here we have the ISE Mini FTSE 100 Index, symbol UKX. And after the market reversed off those highs, which we now identify as the 465, 475 focal area on the upside, we're now seeing a natural retracement. And that natural retracement box comes in around the 405 to 430 area on the downside. The immediate observation that I have is that the FTSE 100 index it has relatively more bullish price action than the S&P 500, and not only did it break to a higher point, but also was retracing in a much more shallow pullback. So it has much better bullish implications than the S&P 500. But with that said, at this stage, any retracement off of this box immediately leaves room for testing it back to the 465, 475 on the upside, and a break above that will measure out a higher move. Any break, obviously, below this 405 area on the downside immediately has us coming back to retest that 375, 385 area on the downside. Thank you for joining me for the Equity Index Options Outlook for November 9, 2008, and we'll see you next week. Thank you.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.